Oh man, this could have been the sickest trade, man. This coin, Bitcoin Cash, could have been the sickest position trade. All right. So some time ago, that initial moment during that crash, imagine, like, obviously here you have like a little base. You can kind of zoom out. So there's a good base right there. And as soon as it came down to here, like, it's a good time to take a little nibble, you know? And we know we have another base right here, so it doesn't quite crack that one, and we would have just sold off our position right here to make a quick little 5% or something like that. But a nice little maybe $500 or something like that. You could put it in right there. Make like how much is that? Like $25 or something. Now over here, we finally got this nice big crack of this base, and here you could have got another nibble here, and then maybe a little bit bigger here, and then you could have started getting pretty big right here, like maybe 2-3,000 or something like that, because that's a big base crack. And if we zoom out here, we would see like that's a huge dip from what we just had just a moment ago. So when you're looking at that, you're like, whoa, that's a pretty big dip, right? Like, here's 1,400. Now we're at 1,000. That's a $400 dip. So, obviously, you're expecting a bounce back to here for like 40%. So yeah, you're gonna go in pretty big right there. Now, of course, what happens is you only get a little bounce up to there, and then at that point, you would sort of look in and be like, wait a minute, like it just kind of came back to this little piece of shit base. Like, you actually got a bounce here. Oh hey, you did get a bounce here. Let's just kind of zoom just out just a little tiny bit here. When this bounced up to here, you should have sold all of it right here. Should have sold best, got $500 here worth, and then as it comes down to here, you get maybe like a 1,000, maybe like 1,500 or something. So let's say you put in 1,000. Let's say you just doubled up, 500, 1,000, and now so you got 500 and 1,000 right there. And then you kind of miss this little bounce, and you're like, maybe this is bouncing fast. Who knows what's going on with this coin. At this point, it was a really heavy crash. But anyway, so you get 1,000, and then you're gonna sell all of it here. You're gonna sell $1,500 worth right here, and that's it. So then you kind of draw, another line right here, because you're sort of expecting, like, here's your major base, right? And in one sense, it kind of came back, like, that's 13,500. That's pretty much a rebound back to your normal base. So that base was at 36. This was 350. That's the rebound, dude. That's the crack and the bounce. So now you have to realize you're playing under this base here, this one right here. So you can't buy until it gets less than that, which it did over here. But you also have to realize that you're playing off of this big base. That's such a strong base that this doesn't count. Like, if you really look back, notice we kind of missed that little. We missed it at first, because when you look back at this, like, it looks like it cracked the base and it just kept falling and falling and falling and never came back, right? It looks like it just never came back. But if you zoom in, you can see that it had tiny little bounces. Those do not count as real bases where you expect the price to return to after this type of crash. The reason I was buying this coin around here or so, even though it didn't crack this base, is because I knew that it never bounced back in full to this real base right here. Like, you can just kind of see from zooming out, you're like, well, it never bounced back to the base, and that's what it just did right now. And now I'm just realizing, like, how long ago was this? This was the 1st of February. So this took 9 days to bounce. That's a long time. I wasn't expecting 9 days of a bounce, but that's what every other coin in the market did. 9 days to bounce, dude. 9 days. Last time, it took only 3 days. I was expecting a 3-day bounce, but we got a 9-day bounce. So Anyway, so you got this big base, you buy here, you sold here. You buy here and you went in pretty big here and you sold here. So you made a good amount there. And then as it started to crack this little bad boy, you started to buy in pretty big size, right? Because this is the real base. So you're putting in like another 1,000, you know, here, and maybe like 2,000, 3,000 down here. All right. So then let's say 1,000 here and 2,000 to 3,000 down here. Okay, so then you got a good amount. Now you get this little bounce back to here, and you're realizing, oh shit, that just bounced back to my base. Like, not the real base here, but this base right here, like this little base right here, this little base, it bounced back to there and didn't go anywhere. So, like at this point, I probably would have actually sold all of my position or most of it right here. At least sold back at least like $2,000 worth, or maybe like, you know, 2,500 or something, and I would have held on to 500 of it, or so. I would have held on to a small position, but I would have sold most of it. So I would have just made my profit right here on that big bounce, 25% off of all this. That's like, I don't know, $500 or something. So that would have been a good trade, very good trade. Now we've got a line here, and we're not going to buy in until it breaks this big base. Here, maybe we could have got like another nibble, just like $100, and then we would have got this nice big bounce. At that point, I would have sold most of my position here. I would have been like, well, this isn't bouncing back to the base anytime soon. I would have sold it all here as it was consolidating. So, you know, maybe I would have made like, so from here to there, 5% off of the $500. So, you know, that's maybe like another $25 or something. So in all, we made 25 here, 25 here, and 500 here. So we would have made $550 off of this nice little trade right here. Then we get this big break of this base. Look, this is a long crash. This took from here 1 day. This is 5 days. So this was a crash of 5 days. Although we had many trades that so far, like 1, you know, 2, 3 trades, maybe even 4 trades. Yeah, 4 trades here, and now we've got this big crack of this base. Now we had another crack here, so we would have gotten a nibble here, and then we would have gotten more here, like layered it. Now here at this point, we're realizing again, we're still playing off this base, dude. We're not really playing off of this one. That's not a real bounce. This was the real bounce. If you look back in the past, this is a real bounce. It never came back to this base. That's the thing, dude. You got to realize it never bounced back. That's why when you go into these next levels down, if it hasn't cracked, I mean, if it hasn't bounced back to this base, you can put in like 2,500 here. You could put in 5,000 here. Because it's at 800 compared to 1,400. This was the real marker, the real base, with small little trades in between that were like significant trades, because this was almost a bounce. That was almost a complete bounce, but it wasn't complete. And now we have another massive drop, and we can layer in so much here. Notice here we only went in here, and this level down we went in 1,000. Because we're playing off of this base. So anytime we make a trade there, here, 2,000. Because we're still playing off of this base. We're going to the next level down. Here we've got, you know, 5,000. What the fuck did I just do? 5,000. All right, $5,000 down here because we're expecting a massive bounce. And look what happens. Well, first we get a bounce back to here. So here we could have actually sold, you know, quite a bit of our position. We could have been, well, maybe like a third of it, like third of half of our position or something, because you never know, we might get another drop. That's the thing. So we might get another drop, but so you'd sell like maybe like you know, a third of it here, half of it here, and then as it bounced back to the final part here, you would be able to sell all of it here. You would have made so much money on this trade. So half of your trade would have been 25%, right? You get 25% off of, like, you know, this is like a $7,000 trade or something like this, or 7,500. So here you would have get 20% off of that, and then here you would have got the other. In fact, you would have sold it right here on the very first big bounce here, or even maybe a little bit here. You probably would have sold it here, but you know, if you were really crazy, you'd even hold it up to here. But I would probably just sell it all right here and just be like, all right, I give up. You know, I would have just sold it all right there. So that would have been 55%. You would have made like $5,000, so much money off of this. Oh man. So just realize that these trades, these position trades can take, you have to take into account the big base, but you have to make like several small trades, like big trades along the way, but not like huge trades. So this is the big huge one where you get to the third level down. So this is the level 1 trade, you're playing with thousands. The level 2 trades, you're playing with double your money. Here you're playing with like your entire account basically, but down here you only play with hundreds. So you just have to take into consideration this big base and how long that it might take. This took like 9 days, over a week, to do this whole thing, and you had like 1, 2, 3, and then you would have had like 4 trades, and then or I guess you would have had another trade here too. So 5 trades, and then 6 trades. So you would have taken 6 trades throughout the course of this big giant crack, of this huge crash. This 6 trades during the 9 days of this crash. That would have been so cool. How much money? Almost 10,000 maybe. So anyway.